Thank you for tuning in to another edition of the Vulcan Report. This end of day report is for trading on Wednesday, December the 14th, 2016. Today was FOMC day. Finally, the Fed came out and made a decision to raise interest rates a quarter of a basis point. And as you can see here, looking at a chart of JNUG, the metals just got crushed. Talking about the gold mining sector and gold futures. We'll look at that in a moment. But you saw that we got down to $5.35 a share. Looking at this hourly chart here, so just total decimation in the metal complex. That right there was JNUG. Here is Nugget. You can see here that Nugget got down to $6.85. Taking a look here at the GDX. GDX got down today to $19.87. Very interesting because GDX, you can see we spiked down. We came all the way down. We dropped from 2071 down to 1990. Then from 1990, the market rallied all the way back up to 2085. All right, took out the prior high on that bar, only to drop all the way back down to where it is now around the 1997 level. So just quite a volatile trading session here in the mining space. Looking at GDXJ, you saw it got all the way down here to 32.12 after plummeting from the $34 handle. So just quite the crazy day. Taking a look now at gold futures, you can see what happened. Alright, gold got all the way down to 1140 today. Just total decimation there. So where do we go from here? Let's take a look. Let's see what the overall position is now. Okay, now you can see we're more pronounced and below the Kumo cloud. Alright, so momentum is pointing down still, crossing the trend lines now. Still happening above the Kumo cloud though, so still anything can happen. Price can come back into alignment and meet this somewhere in the cloud or even still up above here. This depends on what happens, but this is a weekly chart, so we're still several weeks out to determine if we're going to base and bounce, or is this thing going to really gather some steam and some legs and go to a full-fledged bear market. We're still bullish overall, but still under a retracement from previous highs. We need to see what's going to be what. It's still too soon to tell. All I know is this, and I tell you this all the time, every day. It does not matter what you think and how you feel. You have to trade what you see. And we know that they like to smash the metals, so what do? You don't go out and start selling all of your gold coins and bullion. No way. Instead, you go in and you buy the paper. How many times have you heard me say, buy the paper? When they're crushing the metals, you buy the paper. So as they were crushing the gold today, what did we do? We went long the paper. We got into the paper. We got long into the JDST. We got long into the DGLD. And what did that do? That paid us. Okay, so we rode the waves or the curtails of what the central bankers were doing when they were crushing the metal prices in the paper market. That's what you do. You trade what you see. Now, when the selling is all said and done, then we will get out of paper, for lack of a better way to say it, and then we'll get back along the metal. And to learn how to do that, you got to come over to pulsewavetrading.com and register for the weekly PulseWave price triggers so that you can gain free access to the Learning Academy where you can learn how to do this. Just as all this action was taking place today, we had a live webinar and we tracked prices leading up to the announcement, and after the announcement. And those that subscribe to the premium trading room got alerts to know what to get out of and when, and what to get into and when. They already had their trading plan together regardless of what the outcome of the decision was today. The traders at the post-wave trading room already are alerted to what to do 24 hours in advance. They know what's going to happen and how to take advantage of it. That's what trading is. Trading is the manipulation of order types in a given market so that you can capitalize on price action. Being an analyst is just looking at the charts like we do in these videos and saying this is what I believe that prices are going to do, this is what I blah blah blah. That's being an analyst. That's analyzing a market. Doesn't matter if you analyze a market correctly or incorrectly. At the end of the day, the thing that matters is, can you make money off of that analysis? And if you're wrong, what do you do to right yourself? Can you right yourself? That's the difference between being an analyst and being a trader. If you want to learn how to become a trader, you need to come on over to pulsewavetrading.com so you can learn how to do just that. So moving on from the gold chart on the weekly chart here, let's take a look at what might be happening on the JNUG weekly chart. Alright, you've seen the price destruction. You've seen me talk about the ramps. Market is just not ready to do that just yet. It's still elongating. It should start curving up by now if it's going to follow its price trajectory. That's what this is, price trajectory. Sort of like when they're doing hurricane projections and seeing what the path of a hurricane is going to go. Well, this is it right here. All right, it's telling you what it wants to do. But price action is just not ready to do that yet. So we have to trade what we see. So the JNUG situation is still showing signs of liquidation. We don't know where the bottom is going to be, but we're ready to ride it once the market corrects. Right now, obviously, is not the time to be long JNUG. It's the time to stand aside of the JNUG. It is not worth shorting a stock below $10 a share. It is also even more imperative not to short a stock that is trading at $5 or below a share. Your downside is extremely limited. You know exactly where it can't go past, which is 0. That's nothing. Your upside, however, is unlimited. So in these long stocks, I like to call them, when they are bearish, you stand aside. You liquidate long positions and stand aside and wait for your next entry point whenever that comes. It could be days, weeks, months, years. You stand aside, let all the carnage happen, and then you get back in long. So when this is happening, you're standing aside this market, but you are heavily operating in the JDST. All right, that's how that works. So how much lower can they drive it? I don't know, but usually when these ETFs gets low like this, they do these what do you call it? The can't think straight. It's been such a day. That's when you do the reverse splits. So they'll take if they drive it down to like $3, $2 a share, they do a reverse split, and now it's back up to $30 a share. They did that with the SQQQ. They did it with the TVIX. That's just what they do. So we'll see if they do it here, or is it just going to go from here and chill for a minute and then just explode? Don't know. I know I'm watching it closely because we're going to be all over this one. All right, let's take a look at, let's see how Pretty Ricky fared today. All right. And you can see it pulled back also. It's deep now into the Kumo cloud. So we're going to really have to watch this to see what it's going to do. Is it going to break down below the cloud, or is it going to reverse here and start following its trajectory like it should? That's going to be the interesting thing to watch in the next couple of days with these. Taking a look at AG. Similar story. It's riding the Kumo cloud. It's in it. And it's on the trajectory path. I would like to say that within the next 2 to 3 weeks, according to what I'm seeing in this pattern here, we should be basing and reversing and heading back higher again in the junior minors. All right, let's take a look at one more here. Let's take a look at GDXJ. See, GDXJ is showing just what I just said. It's in the cloud. It's just dipped in it, but it looks like it wants to follow this trajectory here. So I think that today was sort of a washout, or a price inflection point, if you will, and now the markets are going to be ready to reverse higher. I think the window is going to be limited. The next 2-3 weeks will be the time to get in, and then after that you'll be chasing it because it's going to just start jumping and skipping higher. So we'll have to wait and see if that is the case. All right, let's look at oil now. Oil also pulled back today. It just has such a problem when it gets up to this $50 handle. All right, so it got up to $54.50, and now here it is at $50.75. So quite the pullback already. Looking like it wants to test support at 49.83. We'll have to wait and see. We still got 2 more days of trading this week to see what's going to happen. If they're going to do it this week and extend these losses, or they're going to start a reverse here. Just wanted to test the support and then go higher. Well, let's take a look and see what the paper side of things says on the equity side of things. Looking at DIG. DIG is a little bit more pronounced, but it's much further away from its trendline support at $42.17. So we need to see if this is going to accelerate and extend losses and get closer to testing the trend line before a bounce or not. Let's see. Let's take a look at the precious Dow. You know that not gonna let anything happen to that Dow. Still green on the screen, ladies and gentlemen. With all the volatility that came in today, and the Dow closing down 94 points on the future side of things, we're still green on the screen. Green on the screen. So nothing really to see here. What about that NASDAQ 100? Is there a story being told there? Nope. Green on the screen. Nothing to see here, folks. Let's take a look at that Russell. The Russell is telling a different story. It's showing signs of pulling back, right? A little correction. Nothing really big, but we got to watch this trend line support at 1329.90 to see, is it going to test this and then resume higher, or is it going to take this out and proceed to head lower? And if that happens, is it going to take the rest of the market with it? Let's take a look at this Nikkei. Nikkei looks unfazed. Here it is, green on the screen. And then last but not least, let's take a look at the dollar index. Dollar index, green on the screen. They're just not letting these markets fall. They'll let them do little things intraday to get you excited, but they're just not letting them go. They're not letting them go. Let's see. Take a look at the euro. On the weekly chart, the euro is bearish, and it should be because it's the inverse of the dollar. But it's maintaining itself here. Very interesting. It stopped falling. It's not falling. Not really breaking into new support, new lows. It's building support. So is the dollar about to turn? I don't know. The Fed is determined not to let that dollar fall. Let's take a look at bonds. All right, looking at the long bond. Nope, new low. So it is coinciding with the raising of interest rates. I told you when I did the bond analysis video, I said that if this stays below this bottom, below this cumulo cloud, they have no choice but to raise rates. You cannot have the bond prices collapsing like this and rates staying low. That's impossible. The lower the bond price, the higher the yield, the higher the interest rate. These trend lines now have crossed lower. They're in danger of falling below the Kumo cloud, along with meeting the price action. If that happens, that is the beginning of a bear market officially, and momentum pointing down would be the end of low interest rates as you know it. If you miss locking in rates back up in here, you missed the all-time historic lows on interest rates. You missed it. You had a chance to lock in a good rate on a 30-year mortgage. You can kiss that goodbye now. The time to lock in rates was here. You could have even let your rates float during this period here. You had about 2 months to let rates float, but you better had locked it in up in here, or you're done now. So those low interest rates on those 30-year mortgages are done. So sorry to be the bearer of bad news there. But at any rate, remember, bulls make money, bears make money, but pigs get slaughtered. So remember to take what you can and give nothing back. See you in the trading room. Peace.